What's up, everyone? Welcome back to Real Wealth, your investing channel to help you make more money, help you keep more money, and then help you take that money and enjoy more life. Mikey, welcome back. What are you saying, brother?
We got a lot to go over this week here. We got some little mixture of good and bad stuff, and some stuff that we're going to kind of project for the future. And hopefully, everyone will be interested to see everything here.
Yeah, it's been a different couple weeks these last yeah, couple weeks, so it'll be interesting to jump in. So before we hop in, I just want to remind you guys, like and subscribe. We do these videos every week. We're going to start doing more videos throughout the week as well. This is our recap video. And just a quick disclaimer, just two dudes on the internet sharing our opinions. Take what you want from it and make your own decisions based on that. So yeah, like Mikey said, we got a good amount to get to today. Cryptos, lots of red in cryptos over the
Yeah.
last little bit. Lots of big swings up, big swings down. You're going to show us the candles on the chart and what all that means. Stocks, yeah, this is a big change from previous weeks. Usually it's breaking all-time highs, but you see something different on the charts. So it sounds like we broke something big on the charts. So we'll see what that means. We've been talking these last bunch of weeks about potential rate cuts. So there's been some stuff in the news around what's coming for that. We have unemployment rising. We have some Tesla news, some problems with EVs, and AI. Yeah, this thing has there's some wild stuff around AI. So anything you want to add before we hop into market overview here while I get set up?
No, I mean, like, it's good to go over stuff when it's negative too. You can't expect things to always be positive, but obviously, over the past 5 or 6 months, it's been very positive for stocks and cryptos. And right now is a little bit of a red time, and I think it will still lead to more rallies, but you're going to have some downtimes along the way.
Yeah, and we've been talking about this on our calls. Like it can't go up forever, and it's not healthy for it to just go straight up. It's actually healthy for it to jump up, retreat some, people take some profits, it chops around, and then it goes the next leg up. And you've been
Yeah.
showing this on the charts. So I actually like to see it. And especially if you have some money ready to invest, it's it's good. You're like, yeah, I get some more things when they're on sale. So let me just share my screen here. All right, you see my screen?
Yeah.
Cool. All right. Crypto market cap is 2.6 trillion now. So down some over the last week. Bitcoin's now at 68,000. Ethereum, let's just stick with Bitcoin. So 68,000. So over the last hour, it's up some. Over the last 24 hours, down or up a bit. But in the last week, I mean, people panic. Like in 1 week, we're down 3.3%. It's not a lot. It's not fun to see red, but considering where we've come over the last bunch of weeks, that's not crazy. Ethereum down 6.8% on the week, and Solana down 6% on the week. Stocks, I'll let you jump in here and rhyme off some stuff about what you see here. I see some dark red. I see some bright green. I see some faded green. What are we seeing with some of the big ones on here?
Yeah, I mean, you're seeing a lot of red across the board overall if you look there, and some of the high performing, high flying names are doing a little bit better. Um, right now the market is still up, and I'm going to just show you something later that's kind of hinting that maybe we'll go a little lower. But even Nvidia's a little red there, Tesla's a little red, Microsoft and Google are barely up. I mean,
Yeah.
it's one of those things where these things have been flying so high
Yeah.
that sometimes it's time for a breather.
Yeah. And if there's a company that you're interested in, if there's a coin you're interested in, and you're like, damn, I missed that one. I'd like to get in. Well, on these down days, maybe have some alerts set up or have your limit orders in that'll automatically buy when it hits a certain price. because this is where you make your money. You make your money when you get things on sale, or you make your money when things before they run. So instead of panicking here, like, look for opportunities and be prepared and understand the ones that you want to get into, so you're ready to get into them. So that's stocks. Mikey's going to share more about stocks a little later. And here is cryptos. So we pop in here every week. This helps us show the narratives. It gives us a quick snapshot of where things are in the market. So this looks at the top. I have a filter set to look for the top 100 tokens and how did they do over the last week. And yeah, as you can see, lots of red, couple oddball green ones here. I'm not even familiar with these ones. Jupe, that's nice. We own Jupe. Jupe is up 9% on the week, but the majority of the week down. I see a couple
A lot of
gaming
red.
ones on here. Say, we've talked about that one before. Here's Sui, Floki. What are some other ones we see here? Link. This one's one that hasn't moved yet, but I think we'll do pretty well. IMX is another gaming one we own. Injective. So anyways, lots of red, lots of big red bubbles on here. Anything you see on here that jumps out at you, Mikey?
I mean, I think it's important to point out that a lot of the ones that have been going up aggressively in the
Yeah.
past month or two, right? The meme coins and the smaller ones like Doge, they actually fall more when cryptos are falling. So Bitcoin's only down, excuse me, Bitcoin's only down about 3.3%. Doge is down 18%, right? So,
Yeah.
big ups, big downs when you're investing in those high risk ones.
Yeah. Yeah, exactly. What else we got here? So crypto, oh, lovely. 1 second here. Close. Fear and greed index for cryptos, 79%. 79 last week. Yeah, so it looks like it's about the same. Last week was 79 as well. So that's kind of staying steady. Altcoins, this is the altcoin index. This is one of the indicators that we use to help us determine when to add more altcoins. So this has been around the same amount from last week as well. We're getting close, Mikey. Bitcoin halving countdown. 14 more days, so 2 weeks. Oh, halving date. That's my birthday, 420.
No,
There's
nice. There you go.
there's there's a meme coin coming out called Gummy that's actually being released on 420 as well. So little crypto banter, guys. So this is coming up, and we've been talking about this over the last couple months about the implications of the halving, what usually happens leading up to it, what usually happens after it. Sometimes we dip some, and then oftentimes we shoot a lot higher. And, Mikey can show us that on the charts again as well. Bitcoin ETFs, things have been a little bit quieter, but there's still money. There's still money coming into this thing. So you can see real quick, the top part above the zero line are inflows, below the zero line are outflows. So the outflows are always grayscale. Here's actually been one right here. I don't even know, 21 shares, but there was actually some outflow for 21 shares. So here's the net inflows and outflows all evened out. And yes, inflows have come down, but they're still inflows. It's still above zero, right?
Yeah.
Net flow, 122 million. Over here it was, big inflows. So eventually Grayscale is going to run out of Bitcoin, or they're going to finally lower their fees to entice people to stay with them. And then this big outflow down here, all this blue, is going to start to get less and less because they don't have any more. And then the inflow here, I expect it to continue. So here's some of the numbers here. Grayscale, they still have 21.8 billion worth of Bitcoin. And then BlackRock is catching up to them real fast because Grayscale, people are selling out of Grayscale and they're putting it into BlackRock and some of the other ETFs. So that's inflows, and we always track this because you want to know that there's still money coming into the space. And when there's money coming into the space, there's more demand. And with the halving coming up, there's going to be less supply. So increased demand with less supply usually means number go up. So let me stop sharing my screen here. So that's a good segue into more crypto talk. Um, like we said on some of those charts there, cryptos haven't been in the green much over these last couple of days. If you want to pop on and share a little bit about the crypto drop and go from there.
Yeah, so I mean, like we talked about, there's going to be down weeks or down months along the way. And, even if you're looking at the stock market, there's times when it's gone down for several months, but it was a 14-year bull rally we had before, right? So, um, same with cryptos. We're going to have bumps along the way. We're going to have dips along the way. We had one after the ETF launch. We had one in March. We had kind of a double dip happening. And, with all of the big rallies that have been happening, you do have to expect those. And even with the rallies that we think are coming, me and Mike and other people are talking about how we're going to get dips from there as well, not just an up movement. And I think it's important to realize that and to not like lose focus. It's kind of like every winter they get the groundhog to see if it sees its shadow, and okay,
Yeah,
we're going to have an early spring, and it's it could be delayed. Spring can be delayed or early or late, and it's coming,
yeah,
but it can be a little late or a little early, right? And we
yeah.
can't predict that exactly.
Yeah, and it's
So
super important to understand your time frame. We've been talking about this a lot. Are you a trader? Are you a day trader? Are you a swing trader? Are you a long-term holder? So if you're a swing trader, that's kind of like your medium-term holder. You may hold for multiple months, you may hold for 6 months, you may hold for a year. Um, or, you might get out of something in a month and get into something else. So if you're kind of like a medium-term trader, don't stress over the day charts. You might see like a 20% down day, but if you zoom out to the week or to the month, you might actually be up 40 or 60%. So just remember, and Mikey does this on the charts as well, like zoom out.
yeah, I think that's really important. And I mean, if you're going to be try to be a day trader, good luck. I mean, there's only so many people in the world that can really do that successfully.
Yeah.
And if you're going to be a swing trader, I mean, you still have to have pretty good timing and logic, I think, right? So
Yeah.
the further out you go, the more opportunity for success you can typically have. So be mindful of that. Be mindful how skilled you are, and just be careful out there and kind of diversify your risk, right? So
Yeah.
um, with cryptos, I mean, the one thing I've been talking about a lot with people is that, every time we ever have a halving, we always end up going up a lot, right? Leading up to it and just after the halving, there's no exception to that. And even in the middle of COVID, people didn't know how many people were going to die or when we were going to get out of lockdowns, and we still rallied up leading up to and after the halving, right? So right now, I'm still expecting that. We're only a couple weeks away now. And, it's one of those things where you don't know the exact week it's going to start, but it's only 2 weeks away. I don't expect us to just go 3 more weeks of down movement. That doesn't make sense historically. So, let's keep vigilant. And, me and Mike were talking about how our crypto portfolios are down compared to a month or two ago. And that's just an expected thing after making so much money from October until now, right? So,
Yeah.
um, stay vigilant, have your long-term view. And if we simply go up through the halving and they cut rates later this year and into next year, then we'll be very happy in the longer term future. So you have to have a game plan and a vision. And if you're always worried about the short term, you might get scared out and miss the long term.
Yeah.
So
Yeah, that's
that's the
true.
biggest thing to watch out for.
Did you want to bring up maybe a chart or two of some crypto coins, maybe
Yeah, we
like a
could show people
Bitcoin or
some
a
of the
Solana or something else?
We could show some of the volatility, right? Show some of these
Yeah,
nice, nasty red candles here.
yeah. We always
Um,
talk about the big green candles. And sometimes we have the big red candles. Oh,
yeah,
look at
so I
this,
mean,
guys.
like Mike was showing here, we got a lot of red, and I mean, the more risky or smaller the name, the more they've dropped. And during the bull portion, maybe they go up more, right? But it
Yeah,
goes both ways. So even render is down a lot. Like they're not Solana and Bitcoin and Ethereum are down less, right?
right.
So that's why we always talk about low risk, medium risk, high risk.
Yeah,
And it's really only Bitcoin, Ethereum, and Solana that are low risk, in my opinion. And some of them are more medium risk, like Render and others, because we feel they have a lot of potential. And
yeah,
some are high risk, like Dogecoin, which is just a picture of a dog. So, I
yeah.
mean, like, depending on which one you are, just be careful how much you invest into them because they will swing around.
Yeah,
So,
and the reason they swing more both ways because the market cap is smaller, so it takes less to swing them. So the market
yes,
cap of like a Bitcoin, Ethereum, and Solana is a lot. It's over like $1 trillion. Whereas, some of the market caps for some of the AI and gaming and meme coins, their market caps are a lot smaller. So to get them to swing like 40 or 50%, it doesn't take as much. So that's
no.
why those have much more major swings.
So, it's funny, Bitcoin kind of dipped more, a few weeks ago, right? It kind of dipped more over here.
Yeah,
And, now it's actually not doing as bad. It went up a bunch and it came down a little. It's really just kind of hanging out here.
yeah,
So it's actually performing better than those altcoins, as I pointed out. And something I posted to my Invest Like Mike group recently, and I've been talking to Mike about, it looks like we could be in the middle of a pennant pattern. And oftentimes these pennant patterns, it's just a bottoming pattern where we went up so much that now it's dropping and just bouncing around in this range. And with the halving coming up, I expect us to exit to the upside.
yeah,
Now it's always possible that we dip down a little bit more or whatnot, but I still think that ultimately we've never had a halving cycle where it didn't go up afterwards. So,
yeah,
let's hope we don't have a banking crisis and we don't have something else weird. Obviously, that could bring stocks, cryptos, and gold down if something weird happens in the world. But without that, we do have that halving cycle coming, right? And I posted this to the group, right? The halving is near, right?
yeah.
And again, it is coming up just in 2 weeks here. So all bets would say that we will go up after the halving cycle. If you look here on the chart, let's go with a red here. You'll see that the halving is noted here. Look what happens after each of the halvings, right? Up, up. It's
And
always
those are
going up.
major increases. Like I'm looking at having one, it looks like it went from 8,000-ish to a whole lot more, like to 1,000.
Here it went up to,
I'm just trying to look at the numbers on the right there.
yeah, no, I think you're talking, this was back in like 2012. It was only like $8 probably at one point.
Oh, $8. Yeah, okay. I'm thinking
Yeah.
thousands. Yeah, so it went
So
from
it went
$8
up.
to 1,000. I don't know why it says November 28th, 1007. Yeah, I mustn't be looking at this right.
Yeah, I mean they went up substantially, right? And you
Yeah,
could see that when it went up, it came down, then it went up again, then it came down,
yeah,
right? So you're going to have some dips along the way, and that's what we're talking about. But um, once you get to that mature part of the rally, there's going to come a point where it can go up a lot when you have the
yeah,
halving cycle, you have rate cuts coming, you have billionaires buying in. It's going to lead to the fear of missing out at some point. So, but again, right now we're trapped in this little pattern after having gone up substantially. So just
yeah. And,
remember
and
where we
this is
came
what we
from.
talk about zooming out. So zoom back a little bit again, Mikey. Like, look at that. That literally went from 40-ish thousand to 73 probably, right? Like those are major gains. So
Yeah,
it's
exactly.
natural for it to kind of come back and consolidate for a bit.
You'll see that after every meaningful move up here, right? We had a rally up for a while, then it kind of bounced around here, broke out again. Now it's bouncing around here. And that's just the natural movement of stocks, to be honest with you, and cryptos as
Yeah.
well. So
Yeah.
not a huge change. But now let's go over to, Dogecoin here, and you'll see that it's actually dipped more meaningfully recently, right? So from where it was up here to where it fell 26% recently, right?
Yeah.
So, it's one of those things where you want to make sure that you recognize your risk. Um, Having said that, I mean, it's still kind of zigzagging and could still just break higher in the coming weeks as well. It's just being volatile on the way up. And we've seen that in stocks like Tesla or Nvidia and things like that in the past as well.
Yeah.
Let's look up Phantom. See again, you could see that it's fallen a lot recently. And after reaching a nice peak, it's fallen 36%, right? But
Yeah. Which is
remember,
crazy, but it also went from 30 to a buck 23,
yeah, it went
300%.
almost 300%, and now we fell 36. That's very normal. And I mean, a lot of people might not like hearing that, but I mean, look over
Welcome
here,
to
right?
cryptos.
And stocks too sometimes. I mean, here
Yeah.
we fell 43, 45% as well, but that was the staircase on the way up. And if you look on your chart, this is wave four. So what comes after wave four? Wave five. So, Mike was talking about how this could be a buying opportunity. Sometimes people like even a Warren Buffett, if they buy Apple or whatever it is that they like, when they get those big down moves, like over here or like over here, that's when you grab some more. That's when
Yeah.
you grab some more if you really believe that they're going higher and nothing has changed for the long-term game plan. And I would argue for cryptos, nothing's changed. The halving cycle's coming, the rate cuts are coming, more money printing and debt is coming. So long term, I believe we'll get a wave five. Now, maybe wave four goes down even lower first, but I still think it will ultimately come up.
Yeah.
And whenever Bitcoin rallies with the halving cycle, the big ship raises the tide for all boats, right? So,
Yeah. And it's not
um,
always easy buying when there's blood in the water or when it's red or when Twitter is just completely negative, right? There's incentive for certain people to trash things because they want it to go lower because maybe they're shorting. So like Mikey said, like if you still believe in this and all those check marks that are being checked off of positive catalysts that can move a market, then this is just one of those pullbacks. So I'm
yeah,
personally happy that it's kind of come down because it allows me to get things a little cheaper that I hadn't had a chance to get into yet, and also add to some of my positions that I want to have bigger positions in.
and also be careful who you listen to. I mean, like, I
Yeah,
like Ray Dalio, but at one point he was anti-Bitcoin. Now he owns it. Larry Fink was anti-Bitcoin. Now he wants to be the biggest owner of Bitcoin. And if you listen to Peter Schiff, he thinks this is garbage. And like, the whole time it's going up, he doesn't give credit to it and says it's just going to crash anyways.
yeah,
Who cares? Now that it's dipping, all he does is post bad things about Bitcoin and points out when gold goes up like 2 or 3%. So
yeah.
it's be
I know.
careful who you listen to,
Yeah,
and you want to make sure that you listen to a plethora of people, and don't just listen to us. Don't just listen to Larry Fink or Peter Schiff. You listen to everybody,
yeah,
and sometimes when you go to a doctor, you get multiple opinions, right? So, but again, just to point out here, Solana went up, it had a healthy pullback. It went up, it had a healthy pullback. It went up, healthy pullback, and now we're in this kind of looks like a sideways kind of a
yeah,
range here, right? So um, let's see what happens here. We're going to keep watching this closely, but again, if I want to point this out, it looks like we might be going into a pennant pattern. And what did we do over here? We had a pennant pattern, right? So these are the type of things that I'm able to recognize on the charts very well. And you'll see these triangular type of patterns, and in between them, rally, right? Rally, rally in between all of those triangles. So, you
yeah.
know,
Big
this is
rallies.
normal. And when you see one of these triangular type of setups, you say, okay, in the coming weeks or a couple months, we're probably going to get a new rally up. And if you said that here, you were right. If you said that here, you were right. And if you're saying that right now, pretty sure you're going to be right after the halving cycle. And
Yeah,
that's the type of logic we're using. And that's why we want to point out the bad, because the bad leads to the good. And
What a great, yeah,
right. So, and again, you need the right analogy. You can't just invest in something that's crap and has a bad long-term view and
right.
expect it to go up right away. So, here's render. And again, if we zoom in a little bit here, get the ruler out. I feel like a teacher getting the ruler out here. Um, so you got 295% it went up,
Wow.
right? And then now we've dipped 35%. It's
Yeah,
very normal. I mean, it's very normal, unfortunately, right? That's just the way it goes. But um, you'll see that although there's these bumps along the way, like this and like this, it's really just an arc to the upside overall,
yeah,
right? So there are bumps along the way, but the trajectory is higher. I mean, if you're going and climbing up a mountain, sometimes there's all these little peaks on the way, and the
yeah.
peaks make it look like it goes up and it goes down. But if you're climbing up that mountain, it's really just going higher, even though there are some lower
Yeah.
peaks.
And it's a good analogy. Like, just think about, like, if you were to climb a mountain, you don't just go at the same pace all the way up. Otherwise, you would just be winded and you wouldn't be able to make it. No, you go a certain amount, you take a break, and then you catch your breath, and then you go up again. Or if we're in a bear market, it's the opposite.
And I
So
want to point something else out too. So, again, one, two, three, four, we should expect a wave five coming for render again. So, as when we say it's expected, we really mean it, because you need a wave two, you need a wave four, right? That's part of the movement, and it moves like a staircase with these
yeah,
Elliott waves. And if you zoom in a little more, you'll see a one, two, three, four, five. So wave three had five waves that are complete. And now we're doing an A, B, C, right? And that's kind of the way it goes a lot of the time. So it's actually going pretty normally. Maybe this C wave goes a little lower, and then we should expect like a
yeah.
five wave up
Yeah.
again.
So Render is
So
an AI coin that we've been following. It's one of the top market cap coins in AI. So it's a coin that we watch a lot because we also own some other AI coins
yeah,
that don't have as larger of a market cap. So what Mikey and I do is we research certain sectors, certain categories that we think will do well. I'm really big on gaming, AI. Obviously, memes are really going crazy, but you get a couple of the flagship ones, some of the top ones, like the renders for AI and like Immutable X. So you hold a good chunk of that as kind of your foundation, and then you're going to want to start to invest in some of the ones that are a little lower market cap because you'll more than likely get more gains. So when render
yeah.
moves, when Bitcoin moves, when Immutable X moves, the rising tide lifts all boats. So when the big guys rise, it's going to rise the other ones that much more. Just like when Bitcoin rises, Solana will rise that amount and then some because the market cap is smaller.
Yeah, and again, I hate to be repetitive, but this is part of chart analysis. Such a repetitive patterns are good in a sector, right? When you have
Yeah,
everything lining up. What do we see? One, two, three, four. Maybe wave four goes lower. And then you would expect wave five, maybe
yeah,
not right away, but sometimes Bitcoin will run first, maybe, and then these will follow. So,
yeah,
if you're not okay with this dropping 20, 30, 40%, then you're going to miss out when it goes 2, 3, 400% up.
yeah,
And that's just the way it goes here. So this is near coin, one of my favorites. In order to be part of the rally for 400% up, you have to be part of the drop for 47% down. In order to be part of the rally for 260% up, you have to be part of the 30, 40% down. It's just the way
yeah,
it goes. And if you're a boxer and you want to knock someone out, you better be prepared to get punched in the face. And
yeah,
Mike Tyson says, everyone thinks they could fight until you get punched in the face.
yeah, exactly. So no, it's just really helpful to see it kind of on the charts, and when you zoom back, you see kind of where we've come from. And yeah, I guess it hurts if you got in like yesterday and you're down maybe 25%. It's like, holy shit. Whereas, I mean, if you got in like a week ago or a month ago or 6 months ago, you're like, oh, okay, cool. Like I've given back some of my gains, but things, this is what they do. They go up a lot, then they come down some, they bounce around for a bit, and then they may go up again. So,
And
so
you'll
that's
notice
crypto.
that the charts can help bring some calmness and get rid of your emotions, because if you can't read charts at all and you don't have a long-term game plan for cryptos, if you don't understand them well, you're going to just look right in front of you, tunnel vision. And if you don't do successfully at a job interview, maybe you'll give up on future job interviews, but you shouldn't do that. And when
Yeah,
you do the charting and you understand the strategy behind it, you'll
yeah,
see we're in wave 4 of 5. Now, a lot of people listening, they keep hearing me say this, but maybe that's not a skill set you really have. You don't really understand that stuff. I have a way of always zooming out and catching these wave patterns fairly accurately. Not everyone's going to be able to do that, but when you can do that,
yeah,
you'll see it brings calmness, and we're not emotional. We expect 30 or 40% drops. Other people are like, holy crap, 30 or 40%. Like, I never want that, right? But if you don't ever want that, then you're going to miss out on the returns to the upside as well. So I
yeah,
like using charts to understand the visual and make a strategy around it. And you're kind of expecting a wave 4 before the halving. Kind of
yeah.
makes sense because then you're going to rally through the halving.
Yeah,
So
and the emotional roller coaster, it's normal for people kind of first getting into it. I know me and Mikey, like, I think Mikey's been in one more cycle than me. I got in during the last cycle, and I'm like, what the hell is going on here? And
yeah.
it all depends when you get in. Like, I got in like during the upswing. I'm like, holy shit, there's money everywhere. This is crazy. And then you get those big dips, and it's like, whoa, what's going on? I thought we're supposed to go up forever. I thought we were doing $100,000 Bitcoin here. So yeah, we're much more calm during some of these downs because we've have some experience and we can kind of see how it plays out on the charts. And again, like if this stuff like seems confusing, and it might some of these chart patterns might be the first time that you've seen this, the more that you're in it, the more easier it gets. So, we've mentioned before, Mikey's hosting a course, actually starting the one you're doing this weekend. It starts tomorrow.
Yeah.
Yeah, yeah, starts tomorrow, and then doing another one in Mexico. So Mikey goes through all the Elliott waves and the pennants and the flags and what does it mean and where do you put your buy, where do you put your sell, your limit orders, like all these things help determine all of that. And again, like over time, Mikey didn't know all this stuff out of the gate. He just practiced it and tuned in to some of the experts, and now he can easily see these waves and cup and handles and head and shoulders and all these things.
Well, and the thing is, too, it's not just charts, right? So I'm going to be going through market cycles, strategies, inflation, interest rates, debt, and I'm going to go deep into them.
Yeah,
And I'm going to really, really analyze what they mean and how they affect the markets. And this is something I was doing in 2020 and 2021 with my training course. And anyone that trained with that was better prepared for the recession that we had
yeah,
and was better prepared for what's coming now, right? Understanding what happens when inflation goes down, what happens when interest rates reach a certain level historically, and being able to get that and tie it all together into a sophisticated long-term game plan. That's what I'm trying to do here. And maybe you think you can dunk a little, maybe you can dribble a little, but you need an overall game plan if you're gonna play basketball, and that's what I'm doing here. So last chance if you want to get in for the online one, folks. It's coming up this weekend. Feel free to jump in. I don't know when we'll be doing another one next. So with what's coming here in the future, it'd be important, I think, to get your skills sharpened up if you're interested. And we have a Mexico one that's coming up in May as well. Obviously, you'd have to spend a little more money and fly down. So if you're not looking to do that, the online would be the best choice. And like I said, full game plan from A to Z on history, strategy, charts, cryptos. What's the game plan?
Yeah. And this is extra helpful because you want to accelerate your learnings as best you can. You can learn this stuff on your own, and for sure you can. There's tons of free resources out there on YouTube, but taking in what everybody tells you and you hear one person say this, another person say that, and
Yeah,
it takes time to figure out and put that all together and learn all the tools. So there's a seriously good opportunity, we believe, over the next 12 to 18 months to really create some generational wealth here. So you really want to try your best to accelerate your learnings so you get to take full advantage of this. So I'm looking forward to it. So let's pop into the next thing. So let's talk stocks. So over
yeah.
the last bunch of months, we've been breaking new all-time highs in the stock market. Um, you're going to show us something's changed on the charts.
Yeah, so again, this is part of why I try to use chart analysis a lot. And you know, sometimes it's hard to do. Like, I mean, like little kids forget to brush their teeth all the time, and hopefully most adults don't, right? You learn over time with experience, and it's important, right? And even though you could tell a little kid it's important, they're not, sophisticated, and they'll forget to brush their teeth. And with charts and with investing, I can tell you to check the charts and to look for certain things all the time, but maybe you won't, right? I mean, like, how important is it to you, and how much experience do you have doing it? It's not part of your routine yet, possibly, right? Whereas I'm doing it. So I'm going to show you something on the chart that I've been tracking for months now. And that might sound crazy, right? You're tracking something for months and you have to wait maybe 2 or 3 months for a change, right? That's you have to be very dedicated to do that. So you'll see here that we had this kind of January rally here that I'm pointing out. Obviously, it was going up before that, but very specifically from January onwards, it was going up and down on this line that you see on your screen. So you'll see it goes up and down over and over and over and over and over again. And it keeps getting supported by this line. That's my bull trend to the upside, right? The uptrend. And I've been pointing this out for the past couple of months, probably saying, at some point we're going to have to break this trend, which we just did, and maybe we'll have a little bit of a pullback. It doesn't mean that it's going to be a monstrous pullback, but a little breather in the market might be coming. And even if you look over here, you'll see that there was a certain trend that was following right there, and we had a dip, and then we went into a new little area that I'm showing here. So you'll see that there's different trajectories and different movements, and you'll notice that in between those movements, here's like a sideways kind of a holding pattern we went in, right? It bounced up and down sideways here, and then it went further up. Well, maybe right now we're just going to go into like a sideways thing, and then it'll go higher. It doesn't mean I'm calling for a crash. But remember, even though the market's going sideways, your individual stock could be dropping more, depending on which one you own. The
Yeah.
market could be going sideways and your stock could be going down more, the same way that Bitcoin's kind of going sideways and those altcoins are dropping,
Yeah.
right? So it kind of works the same way. So um, I'm not expecting a crash necessarily or anything like that. But if you look at it over here, you'll see that we have kind of a gap on the chart here. That's a pretty likely spot we could fall to. And you'll see that there's kind of an area over here as well, right at the top there where we have a little peak. And we could end up catching support there. You'll actually notice that over here when it went up, it caught support on that first red line. It went up, it caught support on that first red line. So we could end up catching support there again. But if anything else happens in the world that scares us a little more, maybe we drop down to the second line here and
Yeah.
figure out a bottoming pattern and go up again after that. I'm not really expecting a crash. So we're going into a dip, and it can affect your individual stocks more. So if you go look at something like Palantir, right? You'll see Palantir's fallen a lot recently because, as I just explained, when the general market's not doing so bad, a more risky stock can go down more. Now, if you look at Nvidia, which is also an AI play, just like Palantir, it's down a lot less than Palantir because it's Nvidia, right? It's like Bitcoin.
Yeah.
So just keep that in mind, right? Palantir,
Zoom out on that chart a little bit more. This one's a great one. Look at this.
yeah, and I mean, like if you really look at it here,
January.
I like
Yeah.
zooming out. Look at this, right? We went sideways in this holding pattern for a while, right? And now we're going sideways again, right?
Yeah.
Well, remember what I showed you on the Bitcoin chart and other charts? All of those connect you to the next move up. So,
Staircase.
when you're looking at it that way, it brings more clarity. And if you're able to use the charts like I just did,
Yeah.
that brings a lot more calmness to your
And
emotions.
if you see it trading in a channel like that's an opportunity, like understanding where we're headed. We're in a channel. If you think that this is going to go up, like the channel that like it was like a 500 is the top and at the bottom it looks like it's like 400. That's like a 20-25% swing. So if you're putting buy orders like closer to the bottom of the channel the whole way, and you could either just hold it because you expect it to go up, or maybe you're selling at the top of the channel and you're just kind of playing the channel. Um, it's a great buying opportunity to buy closer to the bottom of the channel.
And you could see that there's a clear breakout on the chart there. You could see there's volume behind it, and it coincides with the general market going higher at the beginning of the year onward. So, you
Yeah.
know, this is the type of stuff that I'm going to go into in great, great detail on the course to really make sure that we train you to brush your teeth, so to speak, on the charts here. And, it's one of those things that can really be helpful. And right now, maybe we go into a sideways pattern and we watch that pattern, or maybe we fall and we fill this gap on the chart here. There's a gap on the chart. Maybe we fill that gap and we form a pennant pattern, right? And then I'll point out the pennant pattern to you guys. That's the type of stuff that we're doing here. And you might think it sounds easy when I'm pointing it out after the fact. And sometimes Michael Jordan makes it look easy to dunk, but it's not. And there's a lot of work that goes into being able to make something look easy. So don't be fooled. It's not easy to do what I'm saying. Look at all the wave fours I pointed out today. I bet you a lot of you weren't even seeing that necessarily. And it's not a judgment. It's just, it is what it is, right? And
Yeah. It just comes with practice.
it comes with practice, and it's one of those things. So let's keep watching this stuff here. But like I've said, the market itself is going into a little bit of a dip. Apple has been dipping really hard for a long time,
Boo,
and
Apple.
right? So, but I mean, long term, this is something where Warren Buffett's probably still going to be okay buying more. So, right now we might be in kind of a channel to the downside. You'll see how very quickly I can look at the chart and see what's going on, right? That's takes a lot of skill to do that, right? We're bouncing in between this range. Maybe it'll fall to the bottom of this range at some point. I don't know. But it could lead to the next move up in the long run. So it's
Yeah.
kind of important to be able to recognize that because, what I just showed you, right? We kind of have like a range where we're going down in between over here, and it led to the next big move up as well. It's the same thing. And sometimes in between, you'll have another big move up. I don't think people are going to give up on their iPhones. I don't think they're going to give up on Apple. And, another one we were talking about with Tesla, it's still stuck in that downtrend, but longer term, it can still go up a lot if they start selling a lot of vehicles and they become more favorable again. We'll go over that a little bit more later, but
Yeah.
it's important to use charts to be able to see when we might be going into a dip for the markets or even on the way up to see, hey, we're maintaining this uptrend line and we're consistently bouncing off of it. If we're above that line, I'm not worried. And you
Yeah.
calm yourself.
Yeah. So there's another catalyst that has effect on the markets. Rate cuts for the US and Canada, and I'm sure in other countries as well. Well, what type of impact does this have on markets? So obviously, when rates go up, it causes some challenges with things. And now it sounds like they're more than likely going to do a couple rate cuts this year. How certain, how probable, like what's been the language been like from the Fed in when something like that might happen, and what's the impact?
I mean, again, this comes down to how sophisticated your knowledge is and your strategy, right? And I've been training myself for so long that when these things happen, I have a very good idea of what's coming. But it's very difficult to do that. Like 10 or 12 years ago, I wouldn't have been able to do that. Now I can for many years. And, there's times when you can print money, Mike, and it doesn't really cause inflation. We keep talking about money printing causes inflation. That's not always true, but it's true when you spend like a drunken sailor, like the way America does in Canada and Europe. I mean, but there's times when you can print money and it doesn't do anything to you. And that's the type of a more sophisticated view that you need to have in order to react properly to
Yeah,
future situations. So, right now, with the rates being high and people having a lot of debt, that's a bad mix, man. That is a bad mix. But if you have a time when people are making lots of cash and they don't need much debt and you raise the rates, it doesn't affect the economy as much. So
right.
you have to really know that grand scale view in order to refine it into a current view. You have to know all of the different permutations and options that are out there. So, let's share the screen here. And the Federal Reserve, they're the chief, they're the king of what everyone's listening to around the world. They run the world's reserve currency for the global superpower, the US of A. So, when you're listening to the stuff here, he keeps saying things like we need more evidence that inflation is easing before cutting the rates. And it's kind of one of those things like maybe if your little kid wants the latest PlayStation for Christmas, you'll say, well, maybe if you get good grades, maybe if you're a good boy, maybe, and you don't just tell them I'm buying you a PlayStation, right? You kind of lead them along the way with a carrot or two. And that's kind of what they're doing here, right? So they want to leave the opportunity that if something bad happens right now in the next coming months, they can just not cut the rates, right? They're not just going to promise you we're cutting the rates way in advance. They're going to play that neutral middle zone on purpose because it's strategically smart to do that. So, they want to make sure that inflation is easing before they cut rates. But they have said that they plan to cut rates 3 times this year. And um, you'll see here, right? Fed officials, people who are working with the Fed, say that 3 rate cuts are reasonable this year. The Bank of Canada expects it will cut rates this year, but they're split on the timing. Some analysts have said that Canada will get 5 rate cuts because Canada is not doing that hot. I mean,
Yeah.
you can go listen to our finance minister or prime minister, and they'll tell you everything's wonderful, but they lie. And go talk to the average Canadian and see what they tell you. They're going to tell you something different. Like if you're a wealthy Canadian, you're doing fine. If you're a middle class Canadian, you're not very happy right now. You can't take as many vacations as you used to. Your mortgage payment's probably higher. And if you're a poorer Canadian or a retiree, life sucks right now. Like good luck going to the grocery store. Good luck getting a mortgage. Good luck saving for your next vehicle. Like life is not great right now financially in Canada. And I'm not trying to be doom and gloom. I mean, it's the same in Italy. It's the same in Australia. They're on the verge of a housing issue. I heard on their news recently, like not picking on Canada or America. It's just everyone took on a lot of debt during the pandemic and then rates went very high. That would be like us all gaining 400 pounds and then we enter a marathon. That's not going to be a good combination.
Yeah.
And that we're in a financial marathon right now after being very overweight on debt. And
And
so it's,
the longer interest rates stay high, it doesn't just affect us, it affects your government. Your government owes a
yeah,
lot of money. And the longer, like they're going to start to feel even more pressure, hopefully, or not. Like we just keep going into more and more debt. Well, we're at a point now where they have to print more money just to pay off the debt. And when they print more money, that's what causes inflation. So it's just this shitty storm that it's just weird to understand how they can even get out of it.
I mean, even using the example, like, if you raise your kids and you promote them to gain 400 or 500 pounds and be super unhealthy, now you have higher food costs. You're gonna have more medical bills. You might have to pay a personal trainer to lose that weight. If you can just try to keep yourself healthy, you eliminate all those costs.
Yeah.
And so if you're a financial country and you allow your debt to go up astronomically, well, now you have to pay more interest. Now you have to raise interest rates on your public. Now you have to do this. Now you have to do that.
Yeah.
That's all bad. Like, let's balance ourselves and not spend so much, and then we won't have those future burdens. But that's not the way it goes.
Right.
I am investing in a way where I assume they will continue spending money and being very irresponsible. And it's not because I'm negative, it's not because I'm anti politics. I'm just being realistic,
And at
guys.
the end of the day, we have to pay the debt.
Yeah,
Anything that the government has to pay out, that comes from the taxpayer. So they either raise taxes, which they don't do because it makes them look bad as politicians, and there's election years, so they don't do that. But there's sneaky ways for them to do that by printing money and stimulating the economy in an artificial way. And in
not to
doing
mention that.
so, it leads to inflation, which is the sneaky tax that just kind of sneaks in. We're already used to it to some respect, but these last couple of years, it's really hurting us a lot.
Yeah, and I mean, inflation is a silent tax, and
Yeah,
the dollar devaluation is a silent tax. Like, you could pretend they're not taxing you more on your statement at the end of the year, but at the end of the day, there's a silent tax going on. And when you get less sugar in your sugar package, as someone showed recently online, you're just paying more for less sugar. And when they raise your property taxes, like in many cities across Canada, they're raising property taxes 8 or 10% all at once. Toronto might be proposing a rain tax where you get charged a tax depending on how much rain your property deflects. Like, it's ridiculous. And they're
wow,
finding a way to get the money out of you. And even the carbon tax, like, I'm
yeah,
not anti the environment or anything, but like, Canada is one of the lowest polluters on earth, and we're being taxed some of the highest rates for carbon taxes during a time when rates are high and debt is high and people are struggling, and
yeah,
food banks have all-time high participants at food banks in Canada. It's not a great time to be trying to
yeah.
take
They have to
extra money
find
from us.
ways to help ease their debt. And unfortunately, a lot of the money that we spend in taxpayer dollars goes to paying the interest on the debt that we owe. So let's jump into employment. Um, it's one thing to have to pay out a lot of money. Is there more jobs? Are there less jobs? How's it looking in that respect?
So it kind of depends on which country you live in. So if you live in Argentina, it's not so hot. The jobs market over there kind of sucks. And if you make money and you put it in the bank, they had over 100% inflation. Like, why even work if they're gonna double
Yeah,
the cost of everything? So it kind of depends where you live and where you're at. But it's one of those things where if you are kind of a superpower of the world, you can get away with it more. So the jobs numbers in the US really aren't that bad. And but if you live in other countries, it can be worse. So let's go share the screen here. And that's one of the advantages of being the global reserve currency and being a global military superpower like the US. Their jobs growth, they jumped up and unemployment dropped to 3.8%. Now, one thing to point out here is that they're saying it's down at 3.8%, but 30, 40 years ago, they only measured if you had a full-time job, if you were fully employed when they were doing the unemployment rate. Now, if you have just a little part-time job, you're considered employed, or if you have two little part-time jobs, they consider it like you're being fully employed. So just remember, if we measured things the way they did back in the 70s, the unemployment rate would be way higher than this. They've created metrics to make it look better because it makes their job easier. I want to make sure
oh, they don't
I
do
point
that,
that
do
out.
they?
Oh, they never do that, right? I mean, Peter Schiff points that out, and I love his long-term views because he's pointing out stuff like that. Ray Dalio points that out. A lot of people point
Yeah,
that out. This is a fake number. If we measured it the way that they used to measure it, this would be way higher. It might even be double digits or something like that. So just remember that, keep that in mind. But the global superpower of the US isn't doing that bad. But when you go to Canada, we've shed jobs. Our unemployment rate has risen to 6.1%. That's crazy. That's like 70% higher than America. And it's
Wow,
up
up
like it,
23% on the year. Ooh,
yeah. So,
what?
people are losing jobs. Now, if you think about it, let's just go here too. Germany, right? Unemployment rises in Germany as well. And it rises less than expected, but it's still rising. And excuse me, their unemployment rate is 5.9%, just like Canada, basically, at 6.1%. They're
Yeah,
struggling. Okay. They're struggling. And, they say rises less than expected because that's a good headline and it will worry people less. It rises, it's rising. So rising less than expected, that's like gaining 10 pounds instead of 20 pounds. You're still gaining weight. And it's one of those things. So,
yeah,
when you look at this here, what does it mean when the interest rates go up, right? Well, we have a debt burdened society. Most people in Canada have a lot of debt or they don't have a lot of money or both.
yeah.
Okay. So when you go to the grocery store, it leaves less money in your pocket. When you raise the interest rates on the mortgages, it leaves less money in your pocket. If Canadians on average have less money in their pockets, they're going to be spending less at a car dealership, at a restaurant, at a movie
And if
theater,
and
everywhere.
if more people are unemployed, unemployment is rising. That means they have even less money in their pocket because they're not
Correct.
making money. So they have the debt and they don't have the money coming in to pay the debt, which means they have to go into more debt. And it's similar situation as how the government is.
And again, just to point out, when everyone has less money in their pockets and you're spending less everywhere, well, I don't need as many car salesmen. I don't need as many staff at my restaurant because we have less customers to serve. So, of course, the unemployment rate's going up. Like, if I had a restaurant with 30 employees and now we have 25% less business, I'm going to cut 9 employees, right?
Yeah.
Like 25%.
So it's like a
So,
cascading effect.
yeah, or more than 9. You're going to cut a bunch of your staff because they don't have any work to do, right? If people aren't buying cars, you don't have to produce them. So it makes sense that the unemployment is rising. And
Yeah.
guess what? When they bring the interest rates down and your stock portfolio goes up more, and when things change in the coming few years, unemployment will go down because you're
Yeah.
going to need more workers when people have more money to spend. So it's
Yeah.
kind of a common sense logic, but it might be difficult to put that all together in the middle of a storm here.
Yeah. No, it's a great way. It's great how you explain that. Let's toss into, well, you mentioned cars and you mentioned Tesla earlier.
Yeah.
What's the latest with Tesla? So I know this one's a volatile one. You know, it shoots up like crazy, then it pulls back a bunch. I know Elon Musk isn't he gets trashed a lot in the media, partly because he's disrupting a lot of industries and people speak trash about people that are making their companies less money and governments and various things like that. So what's the latest here? Are we going up? Are we going down? What's up?
So, in the past month or two, we've been talking about Tesla here and, how their stock got downgraded, how EVs are not selling as much. And I've been kind of recommending that either you nibble on Tesla like Mike is as a long-term play and he can add more if it gets cheaper,
Yeah.
or you just stay the hell away from it, especially if you're short-term minded. I've been recommending that maybe I might short it actually in recent months. So it's not something I've been bullish on. And we didn't get any good news again recently. I mean, Tesla recently, just this past week, their shares fell again because their deliveries dropped by 8.5%. So what does that mean? They're selling less cars, right? Like if people have less money and they have more debt obligations, you're not buying a new Tesla. Maybe you'll buy a used Tesla. Maybe you'll buy a gas car. Maybe you'll buy a used gas car. And that's just the way it goes. If people have less money, they're going to spend less. So, when you see these type of headlines, it's not good. During the whole pandemic, we were seeing them increase production, increase deliveries, and so the stock price went up.
Yeah.
Well, now it's the opposite. We're falling, and it's gone down 8.5%. That's huge. Okay, that's a lot less cars that they're delivering, which means a lot less income, which means a lower share price.
Yeah.
And on top of that, we're not just picking on Tesla. Ford Motor
Hopeville.
has decided to delay the start of EV production in Canada here, and they're delaying it till 2027. Like that's a big deal,
Oh my
folks.
goodness.
Okay, like that's not a small delay. That's like 3 years away here. Okay, so I think what Ford is saying, well, hell, if Tesla is not doing well right now, what the heck are we gonna do? Like, we don't even have market share. Why would we invest into kind of a failing industry short term right now if we have to wait for it to get better?
Yeah.
And it's just one of those things. And you'll see here Alessio Rastani, one of my favorites. He just did a video on Tesla. I posted it to my Invest Like Mike group. Check it out. And he also thinks we're going lower, and I do too. Um, so it's not good news for Tesla. Remember, the market might dip right now. Imagine the market starts dipping more than we think. That's going to really bring Tesla down. It's already bearish when the market was going up.
Yeah.
So if the market goes down, that's a double whammy for Tesla. So let's keep that in mind. But again, we're seeing all of this bad stuff, Mike. And if we go to the Tesla chart, this is something, again, chart analysis, very important. I've been pointing this out in our videos. I've been following this downtrend for a long time. I've been aware that we've been under this downtrend for a long, long time. And when we had that recession of 2022 and we came back up, I was watching this dotted line here and I said, look, we bounced off of it. Look, we bounced off of it. Look, we bounced off of it. And now, with all this negative news, I think we're going to break below this range. And that's not to scare people, but that type of stuff does happen. And, longer term, it could still be okay. If you look on the chart here, we had kind of a moment here where we broke below that range. If you look here, right, we kind of fell below that range.
Yeah.
So maybe right now we break below that range.
Yeah.
But then we went up, right? We
Yeah.
went up when things changed with inflation and the economy and whatnot. So I don't know if they start lowering interest rates aggressively over the next year and they are printing money and they're doing different things. Maybe they lower the price of EVs. They subsidize it. People might start buying more Teslas again,
Yeah.
and they might start selling Optimus robots in the next couple of years, or semi trucks, or
Yeah.
whatever. And we have to watch out for that. But let's just remember that in the short term, there's a lot of quality control issues. When they made the first plasma TVs, sometimes your picture went bad really quickly. Nowadays, that rarely happens because they
Yeah.
fixed that quality control. I've
Yeah.
seen many reports of Tesla having the steering wheel fall off and they won't charge in the winter and you don't get the range that you thought you would get. Like all these things, like the door doesn't shut properly. And it's a new car company, guys. Like it's just one of those things. And they'll figure that out. Elon Musk's a smart dude. He's going to work hard to fix those and never have them happen again, basically. So,
Yeah.
um, maybe you didn't want to get a flat screen when they first came out. I know I didn't. And now everyone wants a damn flat screen. So it doesn't mean that you give up on them.
Yeah.
And
So you're taking on a little bit more risk by getting in during times like these. And we talked about this in cryptos as well. Like if there's a project that you believe in and your time frame isn't like weekly or monthly or 6 months, then you can nibble in certain things and just understand that Tesla isn't just a car company. It's a whole lot more. But the people that want to see Tesla fail will go out of their way to shine the big spotlight on, this area over here. So can we go lower? Clearly, we're in a downtrend on the chart. Now, again, you just got to ask yourself, like, do you think Tesla will do better maybe a year from now? Do you think it'll be higher? So this is where you just got to figure out your own investment thesis on coins or stocks and various things. So that's cool. So continuing on with that, we're almost at the end here, but continuing on like high risk and tech, AI. And we've mentioned this a couple times on our podcast, and we're going to mention it a lot more. We're going to be doing deeper dives into some AI projects that we feel will do well. What are you seeing in the news? Obviously, it's going to disrupt many jobs out there, and already has. Have you been playing around with it much, or like what jobs are you seeing could be affected?
So I'm not personally using AI much myself. I mean, me and Mike are friends with the guy that's using it to invest in cryptos. I know many people in the real estate industry using it to auto generate all their advertisements in multiple languages.
Yeah.
Um, you know, I've heard a lot of very reputable people say that if you don't adopt AI into your business soon, you're going to get swallowed by the people that do. And
Hmm.
that's probably true in the coming years. Like,
Yeah.
imagine you were someone who was doing everything with a pen and paper when they invented the internet and combined it with good computers. If you didn't use the internet and computers and you were the pen and paper guy, you got swallowed by all the other people that used the computers and the internet to their advantage. Like, nowadays, good luck. Like, I've been in real estate for such a long time. The older the person I'm trying to contact, if it's a real estate agent or something, the more they'll respond and pick up the phone because older people grew up with phones. If you're
Yeah.
a younger person, they ignore my phone call and they text me back right away. It's like,
Yeah.
why didn't you answer the phone? Right. But, maybe I'm the old dinosaur. I just got to, text them back, I guess. Right. Like, if they will respond to me quickly by text, and I stubbornly want to make them answer my phone call, I'm wrong. Like, just text them; they'll get back to you right away. And
Yeah.
you sometimes got to give up. Like, I like a phone call; it's more personal. But maybe I want to hear back from them immediately with a text.
Yeah.
And so, with AI, it's kind of scary because, again, it's not that I'm anti AI or anything. I mean, it's coming. And maybe some older gentleman was anti the internet back in the day. But if you ignored the internet, it's going to take away your livelihood.
Yeah.
Okay. And when you look at AI here, like, Elon Musk says AI will eventually create a situation where no job is needed. Now, I'm sure he doesn't literally mean zero, I'm sure, but like, even the AIs themselves, once you build enough of them and they're smart enough, they'll build more AI robots. You don't even need a human to build the AI robot. The
Right.
AI can build the factory that makes the AI robots. You don't even need a human to do that. The
Right.
AI can mine metals and mine for gold on behalf of humans. Like, at some point, the robot's going to work 24 hours a day and do a way better job than you and never get injured and never need a pay raise. And, you know, the IMF warns AI to hit almost 40% of jobs worldwide and will worsen overall equality. Now, remember, it's going to hit 40% of jobs just in the coming years. Maybe in 10 or 20 years, they're going to say it's 60%, right? Like, you don't really need to have someone do a lot of these jobs. Like, you can have robot taxis, robot semi trucks, robot everything, really. Like, you
Yeah.
can have AI lawyers. You can ask an AI a question and it will give you a legal response. So you don't need a
You can
lawyer.
create movies, you can create music.
Everything.
It's
Uh,
wild. It's
like there,
progressed so
there,
much.
there's someone very famous called Tyler Perry, Tyler the Creator, and he's made all kinds of stuff with Nickelodeon and funny movies and TV shows and stuff. And he was building a like multi-hundred-million-dollar movie studio. Then someone showed him AI and Sora, and he said, "Okay, I'm not building this anymore." And he cut off the build of his new movie studio, his production studio.
Yeah.
He's just not going to do it because he thinks it's a bad investment. And the humans that he would hire to work here won't keep up with what a computer can do in seconds. I
Right.
told Mike this like 6 months ago. They used AI to make like 130 new South Park episodes like that in an instant. You know how long it would have taken and how many humans and how many hours it would have taken to make 130 episodes of South Park? They made them in minutes or seconds with
Yeah.
AI. And when
Yeah.
you watch them, they're funny and it looks like a South Park episode. Like you can't even
It's come a
tell.
long way for sure.
It's
Yeah.
come a long way.
And
And
it will
I mean,
continue to come a long way. And like we're in exponential mode now, and it's hard to even think what this can turn into. And I'm excited to do some more videos on AI because it's going to change everything. The internet changed everything. Like tenfold. This changes things like thousandfold because it builds upon itself. So you either adapt and accept that it's here, or you kind of just sit over here patiently while the world changes, and then you're like, oh crap, like I have to do this anyway.
Yeah.
So that's cool, man. Thanks for sharing. We're at the end. Yeah, we keep trying to trim this, but we keep there's so much to chat about. So we appreciate everybody listening. Make sure that you like and subscribe. And just a reminder on the disclaimer, we're just two mics on the internet sharing what we know. So take what you want and make your own opinion from that. So and if you have any comments or questions, put them in the comments below. We read them all. We respond to them all. Anything else, Mikey?
No, that's it. I mean, keep following along with us. If you are interested in jumping in that training course this weekend, let me know. We've got the May one in Mexico as well, and it'll set you up for a game plan for the rest of the year and onwards. And
Yeah.
stay tuned for further updates on the cryptos, right? The halving's coming in 2 weeks.
Yeah.
Let's see what our next 2 weekly recaps look like.
Sounds good. All right. See you, everyone.
Take
Bye-bye.
care.